So in my last video, I was talking about volatility, and people were asking, like, what the hell is volatility? Does it even matter in the market? It's surprisingly, I'm surprised when I hear people ask me that question. Does volatility matter in the market? I, I was crazy. Man, I was boof. But anyways, in this video, we're going to be looking at volatility and what it really entails. So just for you to understand how volatility works, what it's used for, and what it can do for you as a trader when you're looking at the markets. So what I'm basically going to do here is I'm going to go straight to Gemini, the glorious AI that everybody likes, right? We're going to go to Gemini and we're going to ask Gemini, explain volatility to us like a child. The answer is going to be very, very interesting, right? Very interesting answer. It's trying to simplify what volatility. I like to watch the thinking of what this thing does. I like when it's thinking. It's very interesting. So it says, imagine you're looking at a part where two different animals are working. Volatility is just a big fancy word for how wild, fast, and crazy price move. Here's how to spot it. The sleeping puppy, low volatility. Imagine a sleeping puppy on a leash. When it walks, it goes in a nice straight line. It might sniff a rock slightly to the left or a leaf slightly to the right, but it stays mostly calm and predictable. In trading, low volatility means the price is moving very slowly in a small, quiet space. It's calm, steady, and a bit boring. So there's something I want to say, but I think I'm going to keep it for later. I'm just going to put it down somewhere. So the next one is the monkey on a sugar rush. Now imagine a monkey that just drank a giant fizzy soda. It zooms, it leaps high up into a tree, suddenly drops straight to the ground, sprints left, and then rockets right. You have no idea where it will jump next. In trading, high volatility means price is making massive lightning fast jumps up and down. So I have another thing in mind. It's also similar with the first thing I have in mind. I'll be talking about these things when we look into the chart, but let's just continue the entire monologue, the entire tutorial for ourselves, right? Why do traders care about the monkey? Well, when it says the monkey, it means high volatility, right? Traders look at the wild monkey market and see two things, right? Two things. A good news, which is the good news. If you're really good at guessing where the monkey will jump next, you can catch it and win massively very quickly. When you catch that running monkey, it's big, right? And then the bad news is if the monkey suddenly jumps the wrong way, it can knock you over and steal your lunch money before you even have time to blink. So when a trader says the market is highly volatile today, they just mean hold on to your hats, the sugar rush monkey is on the loose. And then, Gemini decides to go ahead and wants to make other conversation. But this is the good thing, right? What we learned here is high volatility means the market is moving at a rapid speed. Low volatility means the market is moving at a slow speed. I want to show you something. Right here. This is marketmilk.babypips.com currency volatility meter. And you can set this meter to anything you want. When I say set, I don't mean you can change the volatility of the market as you choose. No, I actually mean you can set the different time and see what market is highly volatile in that time frame. For example, I want to watch the 1 hour volatility market, and I can see that the US dollar right now is the most volatile market in the recent 1 hour. Oh, I'm having network troubles. Let's refresh that page. All right, so we're back and the data has updated. So in the recent 1 hour, we have the New Zealand dollar having the most volatile market, and you see the US dollar just jumped up. So within the last 1 hour, this will keep changing as you leave it. It will keep refreshing every minute or so. When it refreshes, you get the latest detail. But this is the good thing about using this whole stuff. The good thing about using this stuff is that when you want to trade, you can know the market that is moving in quick shifts, like very, very fast speed. But this is where confusion comes in, and this is what I wanted to talk about while I was reading the information from Gemini. The thing you need to understand is low volatility doesn't mean consolidation. A market can have low volatility and not be consolidated. It's moving, but it's very slow. So low volatility doesn't mean consolidatory market. Low volatility means slow movement, whether it is in one direction or constantly within the same direction. It is low volatility. You can have high volatility and have consolidation. So let me just show you what I'm trying to say. We're going to go straight to the chart. We'll head into the big majors, right? These are the big majors. We're going to head straight into the majors. I'm going to go into the daily time frame. Now, when you look at euro against the US dollar, what do you think happened when price was doing all of this? All of this move, this sets of candles that I just highlighted, it was high volatility. There was major move here. These 2 days, there were major move. This was the 2nd and the 3rd of March 2026. Crazy move. The market was moving in one direction at high speed. Okay, that makes sense. What about this? These days in particular. This was between the 10th of February and the 17th of February. It was low volatility days, but this is the miracle. The market moved in one direction. So low volatility doesn't mean the market is not trending, because if you go down into the 1 hours, and let's go back to those days and see what it looks like. You can see what I'm talking about. Ooh, I think you're going to get confused when you see everything on my chart, so I'm going to turn it off, turn off the indicator. Yeah, that makes sense. So you can see right here, I'm going to take this out, and what you see right here is just between this day, this one here, and this day. You can't call this market a consolidatory market. It's not consolidating on the 1 hour. It is trending. It is downtrending. But yet it was low volatility, solely because the market was capped within a short range compared to its default move. So a short range of move upwards or downwards is what low volatility is, not consolidation. This is where I was trying to explain this to somebody online. He was talking about low volatility is equals to consolidation. So I was trying to trade the higher volatility market because I was trying to escape consolidation. Is wrong. Absolutely wrong. You can be trading a very sluggish currency that is moving in one direction. So why do most traders like high volatility markets? I'm just going to give you quick examples for you to understand this. Look at this chart again, the euro against the Swiss franc. Imagine you sold from here. After this day, you saw, oh, this market has gone to a place where I think it will sell from. I want to sell. And you hit your sell, place your stop loss anywhere around here, whatever it is. And you hold this trade for days to close at this bottom right here. Now you made a 3.2 risk to reward ratio, right? You made a 3.2 risk to reward ratio, but it took you how long? This took all the way from August 18th to October 16th. And this move was solely just to make how many percent move? This was just to make a whooping 1.59% of the market. Now, the same 1.59%, right? That same 1.59%, if you had sold from here, let's say somewhere inside this place here, you would have made that same 1.59% in just 2 days. So this is the difference between low volatility, high volatility. It's the speed at which price is going to move in your direction, or rather in a direction, whether it's yours or not, right? While for low volatility, it's the same thing. It's the slow rate price is going to churn till it gets to the targets, whether in your direction or against your direction. Low volatility market does not mean the market respects you. Now, in my last video, I talked about analyzing the high volatility market. Next video, if you want to see me analyzing the Euro Swiss franc, which is a very low volatility market, I'll have a video up here somewhere, and probably the next video you watch alongside this video. Do well to join me in that video. See you. Peace.